Good morning. It's Harvey Jackson. Just going to go through the markets real quick. Canadian canola production update with StatsCan came out yesterday. Uh, let's just go through the U.S. Crop progress. Of note, you can see here that 85% harvested on spring wheat, and everything is progressing quite quickly. Fairly low harvested percentage on corn, and virtually no real harvest yet on soybeans yet is all. Um, and as far as crop quality decreasing, this was expected, and you're seeing still some good stands compared to last week, very similar to what we normally would see at this time of year. This is what we expect to see from the USDA this week. So we'll fill in something like this, but you see average trade of corn, uh, in the 2 million kind of bushels, soybeans and wheat. We'll be filling in these tables and sending this out to growers as we get those updated numbers. Here's my current and my what if kind of scenario. So what I'm saying is here's the what if we do have a crop year that's a little bit different than today, but my big head's in the way. But anyway, you could say that we're looking at 3.1 kind of million metric ton ending stocks that's going into this year's production, uh, and some estimates are still around that 40 bushels the acre. I expect to see it a little bit lower than last year, and that would actually push down their stocks of use. You can see it here. If we push down our yield, we would end up with a stocks of use at 10%, and last year's was at 17. And with a higher yield, we would be at the 17.2 kind of thing. So, and it's just showing the same kind of pattern with the actual production. If we, what if we have smaller yields? If we get closer to the 40, we're going to have similar to last year, kind of our production number. And this is just demonstrating it in a different way as well. So the investigation for the anti-dumping is noted that since they started the investigation basically on Monday, so you basically have a year uh, for it to be completed, and it can be extended another 6 months as well. So uh, there could be some dragging feet, and this could last longer than expected. But if they really need it, I think things will change. That's definitely something that uh, China has played their cards before in that way. So oil seeds. So just looking at the markets quickly as I took the snapshot, canola down 250 to $3. Rapeseed 3/4 of a dollar per metric ton. Oil, soybean oil is flat. Palm oil up slightly. Crude down a little bit again, and soybeans down 12 cents. And your wheats are hovering 5 cents to basically flat. Canadian dollar just trading down a little wee bit as well. So what I'm doing here is just having a deeper look at just this last move and see where it might have as far as a relative retracement value. And we're right in the 61.8 to 78.6 kind of a retracement to get back to our previous highs of 620. And then if I look farther back and take in the full move for the last, give it the 6 months here, and you can see that we're having trouble getting even over the 23.6 retracement value. You need it to get here to hop to there to hop to there. Every one of these will actually add a little bit more strength, but it also creates a resistance. So obviously 23.6 is going to be a resistance level, and we'll see if this news on uh, the Chinese anti-dumping is going to maybe push us below this level. It's possible, and if it does, 540 is not out of the question. Rapeseed, it's holding up a lot better. We're trading between the 23.6 and 38.2 in that same kind of timeline. And so we're looking for some support there. And the support will actually come from this differential between the canola and the rapeseed value. And we're trading at near some highs that we've made in the last few months here. And if I show this a little bit farther back, it's actually been since basically February that this market has been climbing. So canola has been getting cheaper and cheaper against the European rapeseed. So if we look at soybean oil in the last little move, we're trading right at the 23.6. You've got your 20-day moving average, your 50-day, and your 10-day. So we're basically starting to trade a little bit sideways here, and hopefully we can break through this and start to get into some of the higher ranges. The 61.8 and 78.6 are significant in the short-term trend. Just looking farther back, so 23.6 is right where the market is on the bigger move going back to June. Here's your crude palm oil. or crude West Texas, and we broke through some of that support down there that we had made late last year even. So uh, and the Canadian dollar being relatively high, it's actually maybe on the fuel side of things. If the dollar stays relatively high here, cheaper crude prices should relate to cheaper fuel prices as well for the farm. So wheat, a couple slides here. We had this nice uptrend, and we broke the uptrend, and now we're trading below the 23.6 and the moving average as well. So we're getting caught and wedged into the 10-day and the 20-day moving average here. So if we look farther back here, or 10-day and 50-day, sorry, we just broke through and needed to punch through and maybe trade on top of this line if or that uptrend line. Milling wheat did exactly the same thing, and the significance is it's the same kind of level at the 23.6 of its retracement. Just looking farther back, the milling wheat is probably those two are tightly related. Being the milling classes for the world. So the next report that I'm paying attention to is the StatsCan would be the model based, and I'm going to say that's probably one that I'm not going to pay attention to much, but the next one is actually the September 12th at USDA, so that should give us a bit of a picture of what's going on in the world. And that's all I have for you today.